I warned that this would happen. 129 Willow Bend for $679. Look at this neighborhood. Nothing in this neighborhood has gone under contract in the past 31 days. This seller has been trying to sell this for over a year. He started at $765. There are 19 listings here. And so if you're trying to resell against all of the new builds, guess what is happening? You have to drop your price. And now he's down to $679. This is below where he bought it at $692. So he's taking a loss, not just on the sales price, but after closing costs and everything, he's probably out $50,000 to $100,000 on this house. You can buy a house if you're competing with builders. They are going to win if you've got the same product as them. This seller is competing with the builders. Now, in this video, we're going to look at some areas that have major supply-demand vacuums, opportunities for buyers, and also realities for sellers that you have to accept. We're also going to dig into some leading indicators so you can understand how sellers are feeling and how buyers are reacting to the current market to give us insight into what may be happening in the spring. So let's start off with January's report. Greater Nashville in 2025 reported a median sales price of $490 for January. Fast forward to 2026, $485, 1% down. I already told you that's what they would happen because I track this daily. But again, this is what happened in the past. Now you think about January results. We're looking at closings in January that went under contract in November and December. It's very delayed. But the big story here is the closed volume. Only 1,428 closed in 2026. Down from 1,488 in January of 2025. There's lower closed volume. Is that going to continue into February? When we look at contracts, we are down 10%. Now, this would be demand, okay? When you look at this chart, think, I'm looking at demand. Now, one of the things I want to do in this video is take supply and demand and help you understand, is it better for buyers or sellers now? In which way is it trending towards? We're going to look at supply, demand, and some motivation and see if we can identify some of those. So right here, contract volume down 10.7%, 243 contracts. Guess what? That's fewer buyers in the market. Now, anecdotally, I hear a lot of people talking about the phones ringing off the hook, the showings, but it is not translating into contract volume, at least not yet. Now, will it? The thing I'm watching for here is whether or not we peak in March. I think it will end up being higher, but the truth is that this is pretty bearish. When we look at contract price, that price is actually probably going to be up for February. That being said, it's trending down for March. So we can see there's two indicators I look at here. One is contracts. Contract price is very flat right now, and it's just bobbing up and down in this range. But the price cuts as a percentage of active listings is popping up, signaling that we should be seeing by May, we should be seeing a little bit stronger price movement. Now let's take a look. Here we can see active listings up 12.5%. Buyers are in much better position than they were a year ago, up over 800 active listings. We also know that some active listings aren't on the market because of the ice storm. 4 weeks ago, I would have said the trend is definitely for sellers, but now I'm saying the trend is neutral. In 25, we saw that we broke into a new high in active listings in February, which was a counter trend, and it signaled that we were going to get a much stronger listing growth. This year, we're still not at a new high in active listings. Now, this could change in the next couple of weeks. If you've followed my channel for any amount of time, I've told you that I think cost to hold is the most important metric for the direction of prices in a market. Cost to hold is high in Texas. Home prices have dropped. Cost of hold is very high in Florida with maintenance and insurance. Prices have dropped. When we look at Tennessee, cost to hold in Tennessee has been high in condos. condos have crashed. But when it comes to single family houses, the cost to hold has been very low. However, is the ice storm a trigger event that will push sellers to just be done with their property? That is a question I do have. I don't know the answer to it, but if it is a trigger event, we could see some capitulation in price. I don't know if that's going to happen. That's just a question I have. But how motivated are sellers currently? We have to go back to 2024, where the listings that are active, the percentage of them that have cut their price is actually lower than where it was a year before. This is an important signal that says that sellers are feeling more confident this year than last year. This is one of the furthest out leading indicators we have, and it's certainly shaping up for sellers feeling confident, counter to the data we see in active listings and even in contract volume. I will tell you, if contract volume stays down 10%, it's hard for me not to see this go way, way up. So I think sellers currently are feeling like contract volume is about to pop. That being said, I had 2 requests. Would love to know your thoughts on Bellevue, and then I'm going to show you condos in Green Hills. Y'all, the condos in Green Hills are a complete disaster. I can't wait to show it to you. But let's take a look at Bellevue first. Okay, so we're going to take a look at Bellevue, and we're going to use this view as well. So let's just see how many active listings are in Bellevue. There's 72 right now. Okay, that's more than there were last year. Contract volume, 19. This is definitely less than last year, much fewer than last year under contract. And the trend is for buyers here. Okay, now, but when we look at price cuts, again, we're seeing sellers are feeling way more confident than both active listings and contracts are telling us they should feel. Are they right? What's going on here? I would love to hear your perspective on this if you have one. Let's take a look at condos. This is the one I'm most excited about, by the way. If we take a look at condos, here we can see, so the filters I have on here is Davidson County, 37215, and then it's just the attached, okay? So the townhouse and condos, this is the area. Tairu Shakuhachi wanted to see. I hope I said your name right. I apologize if I didn't. What's going on with condos and townhouses? I hope you don't own one, Tairu, because we have 50 active listings and only 2 that have gone under contract in the past month. This is a signal. If you were a buyer, this is like a dream signal. Now, I know what you're saying. You're like, oh, Ethan, it's overpriced. Look, when it feels like this, just make your offer. It's incredible. If you're trying to time it, you look for the supply ratio, the active to contract ratio to be completely blown out. What it says is there's a vacuum in the market for demand right now for Green Hills townhouse condos, attached condos. There's only 2 that have gone under contract in the past month, and we have 50 active listings. Think about that, y'all. We have 2 that have gone under contract in the past 31 days, and there are 50 people wanting to sell their house. This feels like over a 2-year supply. Now, we know that this is seasonal, and I think this will bounce, by the way, y'all. But this is a brutal stat. This is what it looks like. This is the supply ratio. Okay, look at this. 25 is the number. All right. Whenever you see it blow out like that, you're trying to time the market for a buyer. That's the buy signal. You look for a like kind type in a similar area, and you realize that it's just there's a vacuum here of demand. I mean, you can see it on the map. This is zip code 37215. You look for all the attached, and you can see there's only 2 under contract the past 31 days with 50 active listings. Just offer something. And you'll probably get told to go pound sand. Why? Because you can see it here. Sellers are feeling more confident, but if you offered everybody, you would probably get somebody that's ready to move on their house, and they'd just be done with it. If you are not using data to think about how to purchase, if you're not making a data-driven decision, you can set yourself up for pain. I've talked to multiple people in the past few weeks that have set themselves up 2 years ago, and now they're paying the price. And whether you choose to buy something or not, just understand the risk going in. To me, that's the most important thing. And with that, I hope you all have a great rest of the day. I look forward to seeing you next Saturday. Thanks a lot.